Hi everyone, this is Paul Lange from Disciplined Trading Strategies with this week's Trade of the Week video. This is the week ending October 8th of 2022. This trade happened on the 7th. That was Friday. It was CVS. It was a tier 2 gap with an entry based on a 1-minute secondary sign of weakness at management advanced rewards risk 2.0 to 1. This trade left a little bit on the table. It was really a big red bar it left, and I took all the profit in the morning. One of those trades you wish I had hung on to some, which I intended to do, but kind of messed up a little bit on this one. Free stuff this week at DTS, nothing for free members, but next week we'll be back on track with some free stuff for the free members. Daily chart of CVS. This is a pretty simple trade. It's based on a gap, so there's only two charts that really matter, the daily chart and then the chart of entry. So here's our daily chart. We're going to gap down to here. I called this a tier 2 gap. It was pretty darn good. It wasn't perfect. That's why I didn't hang on to a lot of it for the whole day. It did a lot better than I would have expected. There's a huge red bar it left. Got in first thing in the morning, so I had a great entry on that. Very nice gap, tier 2 gap, CVS. 60-minute chart really doesn't show us much. You're just seeing the gap from a different point of view. There it is. 5-minute chart really doesn't show us much because you're just seeing the fall. What we can see in the 5-minute chart is the targets. There's where we opened on the gap down. Entry came the opening 5 minutes of the day. Target 1 was on that quick little bounce. Looking at the way it dropped, I can't fault that. I think target 2 was the one that I should give it a little bit more room to and hung on to 2/3 for later. Target 3 I clipped out there. That was already a big red bar on the chart. You can see it did drop a fair amount more than that. So it was a nice trade, but really should have had one of those targets for a better target than I did. 1-minute chart just shows you the entry here a little bit better, and this was taken on a 1-minute secondary sign of weakness. I wasn't too aggressive with the entry because of the characteristics of the tier 2 gap. Told me it could come back. It did come back initially, some in here. Could have come back further, so I waited a little bit for the entry and took the entry right on weakness through there. Entry under 92.88, stop over 93.90. Trades underway, target 1, target 2, and target 3 is off the chart here for the 1-minute chart. One of the reasons I chose that particular trade was because it was a gap, and one of the nice things that you have is that the gap offers you an alternative type of trade. Some days we've had the last couple of weeks in the market's been tricky. We've had big gap downs, counter trend moves, and the gaps are kind of unique trades, and that's why I like them. We've not had a lot of gaps the last couple of weeks because earnings season has not been around. Earnings season will be starting up again, and that offers a nice little variety to add to what we do as equity traders. If you like what we do here in the DTS Trading Room, come join us. Go over to the DTS homepage at disciplinedtradingstrategies.com and figure out how to join us in the DTS Trading Room. Until next time, this is Paul for DTS. Good trading, everybody.